Simon Caudry is on assignment. My name is Emil Kalinowski, and I am broadcasting to you live from the studios of Radio Cayman, 89.9 in Grand Cayman, and 93.9 in Cayman Bracken, Little Cayman. And what we're going to be talking about today is what happened 28 years ago on this very day and what it can tell us about financial markets this very day. What happened on June 26, 1997? Well, one of the best financial books of all time was published, Harry Potter and the Philosopher's Stone. What kind of connection could there possibly be? Well, ladies and gentlemen, over the next 30 minutes, I'm going to be telling you how today's newspapers, the best newspapers on financial topics in the world, the Wall Street Journal, the Financial Times from London, are talking about wizards, they're talking about stones, and how that still can be tied to what happened 28 years ago, even though it seems silly. Indeed, J.K. Rowling started out her big book by saying, here's the first line. Mr. and Mrs. Dursley of number 4 Privet Drive were proud to say that they were perfectly normal, thank you very much. They were the last people you'd expect to be involved in anything strange or mysterious, because they just didn't hold with such nonsense. You must be thinking, well, this is nonsense. Harry Potter, financial markets? After all, isn't this Money Sense? Isn't this a show that's tied closely to the chartered financial analyst community here? A group of highly trained and extremely professional individuals? I myself am a CFA. I myself am highly trained and extremely professional. You can see so on the Radio Cayman YouTube page, by the way. You can see this broadcast being shown live, and you'll see that my shoes are on. I remain highly professional. But let us get to the point. What is happening in the world that has to do with stones, wizards, and how we might make an investment from those stories, from those themes. Financial Times today, one of the top stories here, it says, quote, chief wizard of collapse builder.ai made $20 million in share deals. It talks about a Mr. Sachindev Dugal, the founder and former chief executive of a collapsed Microsoft-backed tech startup. He made $20 million by selling shares in his business. Now, he styled himself, quote, as the chief wizard of this software company. This company was highly acclaimed. Indeed, in 2023, when the Qatar Investment Authority invested $250 million, well, maybe they didn't invest all the $250 million, but they raised $250 million with their partners into this firm with Mr. Dugal. They achieved a valuation of $1 billion, and indeed, they called it a tech unicorn. The United Kingdom was very happy to have a tech unicorn. So here we go, a wizard, a unicorn. And it all came down because of bogus sales, or at least that's what's alleged. The Builder AI filed for U.S. bankruptcy protection this month after an internal investigation found evidence of bogus sales. So that's just one story. Okay, wizards, unicorns. What about another story? Let's turn to the Financial Times. Again, another story. The race for better batteries can charge up an unloved metal. If you'll allow me the poetic license, we're going to call it a stone. Indeed, governments around the world, especially the advanced economies, are labeling different minerals as critical to their economy, critical to their defense. Vanadium, which is the headline or the topic of this particular story, is on the official U.S. list of critical minerals, or critical stones, if you'll allow me. But guess what? Commodity investors are not interested. The price for the last 5 years, according to this story, is unrelenting losses. 5 years of prices falling. Now, very interestingly, the prices here are listed in RMB, which is another way of saying the Chinese currency, the renminbi, the Chinese yuan. These prices are denominated in Chinese currencies. That's going to be very important in our third story about wizards and stones. By the way, in the article, they talk about how vanadium earns its stripes for strengthening steel. And what is that used for? Well, it's used for buildings and infrastructure. Oh, by the way, it's also used for defense and aerospace. Interesting. That's going to play an important part as we get further into the show. The article says that the frail property sector in China, the biggest consumer of steel, has contributed to the mineral's weakness, but recently there's been an uptick. Some talk of perhaps the metal being useful for energy storage. Or maybe for defense and aerospace. Let's turn to what's happening in the Wall Street Journal. We travel across the pond, and it is another story about stones, ladies and gentlemen. China is tracking down its rare earth experts and taking away passports. Beijing is asking companies in China for a list of specialists so that they can keep tabs on them. Beijing does not want trade secrets leaving the country about stones. It's silly, isn't it? Philosopher's Stones, Harry Potter, and yet we're already 3 stories into the Wall Street Journal and Financial Times, and there's talk of wizards and stones. China's control over materials is the center of a U.S. trade-China war. At least that's what this article says. Of course, that's not actually what this confrontation is about. The United States is holding back technology. China has leverage in the metals markets, and they are putting the fetters, they are putting the halts, export restrictions on all manner of stones that are useful for, what are these rare earth stones useful for? Well, they're useful for making magnets that are used in automobiles and wind turbines. Oh, and also drones and jet fighters. So that's 2 stories in a row, ladies and gentlemen, where the article starts out, oh, it's used for these things in our industry and construction. Oh, by the way, also drones and jet fighters and defense and aerospace. According to people familiar with the queries, China's Ministry of Commerce in recent weeks has asked rare earth companies based in China for personnel lists that include specialist employees' specific expertise, education, research background, and personal information. China is the world's largest miner and processor of rare earths, and it makes around 90% of the world's rare earth magnets. With trade tensions heating up, China in April established a new system for licensing the exports of rare earths and rare earth magnets. One of the main hurdles is the paucity of rare earth production expertise outside of China. Now, this story goes back all the way to 2010, when China first put temporary restrictions on rare earth exports to its rival, Japan, after a confrontation / accident in the seas where a ship sank. Let us broaden our definition of stones. And if we do so, we see that the number 1 headline in both the Wall Street Journal and the Financial Times is about stones. I mean, sure, the Wall Street Journal leads with a story about Shell being in early talks to buy up rival British Petroleum. Maybe that we could say that's shale talk, but Shell has denied this. So we're going to move on to the leading headline in both newspapers. Trump warms to NATO, won over by military spending and flattery. In the Financial Times, NATO allies pledge to meet Trump's demand for defense spending bump. Here from the Wall Street Journal, I came here, Trump said, because it was something I'm supposed to be doing, almost a complaint, he said during an hour-long news conference at the end of his brief trip to the Netherlands. But I left here a little bit different. It's not a ripoff, Trump said. Wow, that's as good a compliment as you could possibly get from him with respect to NATO. What are we talking about here with stones and NATO? Well, it's already been brought up in our earlier conversations about vanadium and rare earth metals. But let's drive the point home with another story. Again, this is all from today's Financial Times and Wall Street Journal on the anniversary of Harry Potter and the Philosopher's Stone. Prague-based ammunition maker issues $1.8 billion debt at reduced cost. At reduced cost. The Czechoslovak group, one of Europe's largest ammunition makers, slashed its interest costs by almost half in a 1.8 billion euro sale yesterday, debt sale, in a sign of investors' newfound enthusiasm for the continent's defense industry. Now, what kind of stone are we talking about here? We're talking about David's stone, the stone that David used to slay Goliath. Of course, and casting the first stone. We're talking about modern versions of those ancient tales. The Prague-based group, which makes much of its revenue from supplying Ukraine's armed forces, observe a dramatic decline in borrowing costs since their recent financing in November. So in November, they asked for $775 million American. They had to pay 11% in November. That has been almost cut in half for twice the amount of money by June. Now, what was going on here? Fund managers, previously, they were complaining, well, we got to avoid the defense sector. That's not very environmentally, socially, or governance safe, is it? We should invest in windmills or solar panels or some such thing. But, quote, listen to this quote here again from the Financial Times. With the war in Ukraine, people are now seeing it as a sector that actually is really important for well-being and the safety of a society, said a high-yield bond investor at a large European asset manager. And then this next quote is very, very disappointing and unsettling and a real shame. But we have to go into this world with our eyes wide open, and I suppose if investments need to be made, they're best made with a full appreciation of the kind of world that we live in. Here's the quote. I struggle to think of a sector that's going to be more compelling in terms of growth prospects than European defense. Well, isn't that wonderful? More stone throwing, all the way from biblical times until the present. Next page, page 7 of today's Financial Times. U.S. armed groups seek slice of Europe's spending spree despite alliance fears. So it's not just the Prague-based ammunition maker. Well, the Americans want to get involved in building all sorts of stones to throw. And how do you make these? Well, you need lead, tin, tungsten, reinforced steel, meaning all those rare earths that we're talking about, all the metals I just mentioned. And where do so many of them come from? China. Trump, next article, one article after another, in honor of today's 28-year anniversary. Trump and Netanyahu's mission to neuter Iran risks further instability. Islamic Republic expected to rebuild its weapons capability while ceasefire remains fragile. Tehran to halt cooperation with nuclear body after strikes. After this break, which we're coming up on to in about 30 seconds, I'm going to take another leap. This time we're going to go to Africa. And then after a discussion of Africa and how it again continues to relate to this geopolitical surge for metals and weapons, we're going to end the show on the best trading book I recommend for investment purposes. And it has to do with wizards, believe it or not. And it doesn't have to do with Harry Potter. This is a real life trading manual, and it's my highest recommendation. And we'll hear all of that after the break.
The time on Radio Cayman is now 7:45, and this time signal is brought to you by Burger King.
Welcome back. My name is Emil Kalinowski, and I am using Harry Potter and the Philosopher's Stone as a guide for today's market news. Why? Because it was published 28 years ago this very day. And you would think, oh, it's so silly. It's about wizards. It's about stones, about silly things. No, ladies and gentlemen, just as we've gone through the first half of the show, there's story after story about wizards, about in our Financial Times and our Wall Street Journal, and about stones, both the metals and minerals, and then in the more liberal definition of a stone in the sense of David slaying Goliath or casting the first stone as weapons. And we're going to continue that story right now for the rest of the 10 minutes that we have in the show. We're going to go to Africa. Then by the end of the show, I'm going to give you the #1 book based if you wanted to learn about trading, about investing. Which book will help you? Believe it or not, it has to do with wizards. And then we're going to end off on a little line from last book of Harry Potter and why that still holds today, why it's still important. And it ties all our entire show together. So, back to the Financial Times. The return of China's Little Africa. That's the headline for a story in the Financial Times. And you may be wondering, well, how does this relate? It's about the Chinese city Guangzhou, known for decades as China's Little Africa. Why? Because on a continental level, trade between China and Africa reached nearly $300 billion American last year, and Beijing is now the #1 trading partner for the continent. The increase in diversification of African interests in China runs counter to a rapid withdrawal of Westerners, not from Africa, but from China. Why? Because there's a confrontation taking place between China and the West. And the Westerners are worried that what happened in Russia in 2022 may happen to their interests in China. Meaning when the war began in Ukraine, the value of investments by Westerners in Russia was written down to zero. Might that happen again one day with China? It may. That's why Westerners are leaving. And this confrontation is taking place in in Africa. That's why the story is posted here. Why does China have such a strong connection to Africa? It's a commodity producer. Incredible commodities and volume is being produced out of South Africa, the Democratic Republic of the Congo, Zambia. In the Sahel, which is the northern part of Africa, Russia has taken over, not officially, but has realigned the countries of the Sahel to be working with it. Almost all of the countries in the Sahel are now pro-Russian, sending their oil, sending their uranium, sending their gold to Russia in exchange for funds, in exchange for weapons. Same thing is happening in sub-Saharan Africa. That's why there's a Little Africa town in Guangzhou, China. So there's that connection. They can have that connection, get those minerals, get those stones. One of the biggest battles taking place right now is in the Democratic Republic of the Congo, which China has been investing in for, let's call it 2 decades now. And they have done a fantastic job of aligning themselves with the leadership in that country, getting the copper, getting the cobalt, getting the tantalum and gold out of there. But and what was the West doing? During this time, they were oblivious, if you wanted to be harsh, and preoccupied with Russia, if you wanted to be generous regarding the Western leaders. But starting with the Obama administration, and then a little bit more with the Trump administration, recently with the Biden administration, the United States has retrained its sights on Africa. A second scramble for Africa is taking place. And there is a big battle taking place in the Democratic Republic of the Congo between China and the United States. Now, it is covert, unlike the overt fighting that's taking place in the Sahel. The battle taking place between Washington, D.C. and Beijing is covert. Do you know that Rwanda and the DRC have been in a low level, or sometimes not so low level, war or hostilities? Well, President Trump thought it a good idea to try to bring peace to that region and has brought the two leaders together to try to create peace. Now, is he doing this because he's a good guy? Maybe, I don't know. But he's also doing it because he wants a mineral deal. Now, you've heard of this already taking place in Greenland. The American president said he wants to buy out, take over Greenland. Why? Strategic location in the Arctic, also loaded with minerals. The Ukraine peace deals that have been attempted recently, dependent on the Ukraine signing a minerals deal with the United States. And here, the United States is trying to create a peace deal in return for stones, for gold, for copper, for cobalt, for tantalum, titanium, etc., to try to push the Chinese out. Let's go back to the Wall Street Journal. Let's end the show on wizards. Now, in today's Wall Street Journal, there's an article there that says small business owners get the best advice they ever got. How does that have to do with wizards? Well, here's some of the advice. This one's that ask for help, be true to your word. And then the last one, don't hire your spouse. Very interesting. You'll have to read the article. But why did that bring to mind wizards for me? Because the best book I ever read on the topic of trading is called Market Wizards by Jack D. Schwager. There's 5 of those books. And just like this article in the Wall Street Journal, he went and interviewed the best traders. Like the article interviews small business owners and offers advice. If you, ladies and gentlemen, are interested in markets, if you're interested in trading, what better way than to get advice by the market wizards? And that's what Jack D. Schwager did. He's got a number of books under that title. Little vignettes, little chapters about how each trader got their start, what they do, their personalities, how they do it differently. You'll find a trader that you align with, that resonates with you, and maybe you can pursue that line of investment in your own portfolio. All right, let us end with a little bit of Harry Potter, a little bit of poetry, a little bit of gold, and a little bit of war. So we started out this show because it is the 28th anniversary of the first book of Harry Potter. And how did the last book end? I read the first sentence to you. Here's the last sentence from the last book of the Harry Potter 7-part series. Quote, "The scar had not pained Harry for 19 years. All was well." Now that seems like a happy ending, but it isn't. It's just a point in time. J.K. Rowling didn't say the scar never pained Harry again and all would be well. Just that it hadn't pained him for 19 years and all was well so far. Because J.K. Rowling knows that these things come in cycles, that human nature is difficult, tragic, fallen, and difficult times lie ahead, whether or not we're in good times right now or were at any one point. One of my favorite poems, my second favorite poem, was written in 1919 by Rudyard Kipling. And he talks about the gods of the marketplace and how people get seduced by them, how the gods of the marketplace are wind-born and clouds and beautiful and promise beautiful things. But in the end, just like J.K. Rowling ended her Harry Potter series, in 1919, Rudyard Kipling said, "When the gods of the market tumbled and their smooth-tongued wizards withdrew, and the hearts of the meanest were humbled, and began to believe it was true that all is not gold that glitters, and 2 and 2 make 4, and the gods of the copybook headings limped up to explain it once more." Wizards, gold. Rudyard Kipling is saying not that gold is bad, just not everything that glitters is gold, but gold itself is valuable. And ladies and gentlemen, let us all tie it together. Stones, minerals, gold, and war. Did you know that from 2020 to the beginning of the Russian war, there was absolutely no relation between defense stocks in Japan, Asia, Europe, or the United States? But after the start of the Russian war and after the start of the Israeli attack, the correlation between gold prices and defense stocks is between 86 and 97%, depending on which country you're looking at. It's a difficult world out there, ladies and gentlemen, but we can rely on those traditional things, defense stocks and gold, in the years ahead, I believe. Well, I hope you enjoy the rest of your day. I hope you enjoyed this flashback to what happened 28 years ago, and I sincerely do appreciate your attention. Thank you.